Welcome everyone to a new video on the Alien Agro channel. Today we'll be getting into a scalping strategy. This will be mainly a scalping strategy, but it can also be used for the higher time frames. It is purely a logic based upon how the market really moves. So I will give you a quick example. The market, quite simply, I think of the market as a staircase. So people say higher highs, higher lows. The same logic we all know. I want you to look at it like a staircase. And how does a staircase continue to go up? Well, needs to be higher than this or this. So if a low is made around here, we technically have held this level, meaning the staircase thus far is up. The moment we start to do something like this and we don't get back above this level, now you have one case being lower. It can also continue like this. Okay, and this is simply an uptrend still. But now let's show another example. Let's say the price went to do something like this. Look what we have here. Now we are breaking a low while we were unable to get back above this high. This is an indication of a possible trend shift. But here you can't say, because it can still simply be something like this. Right? The moment you can say this really happened when this breaks. Okay? So in order for the staircase to be violated, let me draw it regularly. It needs not to break once, because like this we can still get this. Okay? But what we want to see is the price breaking both staircases. So we want to see it get below this and unable to get above this for a trend shift. Okay? Now, where do you look at to develop your staircase? It's simply the high of a staircase and the low of the staircase. And usually within price, if the move, normally, a candlestick chart moves a little, this really on the way up. So let's say you retest a couple levels within here. There always is a little bit. Let's just, for a quick example, say here the price did something like this, not going back to this level. Now this is a level we watch it. So it's either we are watching the previous high, or the previous low, or there is something in the middle. Now let's look at the down way. It's simply, again, we look at the high, we look at the low, and something in between, usually a fair value gap, something in that way. And here we also have the same logic. When does the trend really shift? When you have both staircases changed. Now we broke this and we are above this. Okay? With this logic. Now let's get into a chart example. What do we see here? I'll simply just draw the staircases. This was your previous staircase. Here again. Look at this little spot. Where did this low where did this low really stop? Your previous staircase. And what happened if we just look at it from a fool's perspective? Here, here, you see we are still making lower lows, right? Lower low, also sort of a lower high, before it broke, of course. Here you see, it's shift. But like on the example, you can only consider it a shift when both have been changed, right? So only here we can say it's here only the low really has been made, right? Okay, so now, like I said before, you want to look at the previous staircases. And now we have a higher high, and we are getting a higher low coming back into that previous staircase. And we get the continuation. And here you see it shifting again. You see we have the staircase. Look what happens. We are making a lower low. Now we also are unable to get back above. So here we have a little short, running back to these previous lows. Okay, now let's get into the next part here. So we know this was our previous staircase, right? This caused that big move down. And let's look at the little staircases in between. Because that's a big thing in price. You have the major swings and you have the minor swings. With this strategy, we want to look at the minor swings because we're looking at the lower time frames. So here you have your high, here you have your high, right? What is happening here? You break this high, here, here, making a higher high. And look where the price really came back. That previous staircase. Okay? But now we have made a higher high. So what do we want to see now? It's staying above this staircase, which we got. And here again, where do you want to enter? When it breaks a previous low or previous high. So here we consider higher high, higher low, the bar break, and a short-term trend. Okay? And here we continue the same. We have this, and we have this. We are still above the staircase. And here, you see, it keeps making lows, lows. Oh, what is happening here? We're making a higher low. What happened before? We got the highs, we broke our high, and then we print that higher low, giving us another trade, running it back at least to these previous highs. But there comes the thing, how do we see continuation then? We first need to determine the steps of the staircase. So, let's get this again. I think it can be quite clear actually, if you just simply look at the low, the high, low, high, low, high, low. Here again, see 1, 2, 3. Just like what we had here. 1, 2, 3. 1, 2, 3. But where do we determine that this really broke? The bar break. So, meaning we will be looking at this little area. This was a higher low. Now we determine you really keep continuing. Still, this really is like a mini range in between. Okay, to get more power into the staircase, a thing I just said before, let's look at regular steps again. We look at this, we look at this, and and sometimes there may be something in between. Okay? But what price more often than not does, really, is, let's just look at purely this. So we go sideways and then we go. And now we start to shift. Okay, so the low, the high, we're starting to shift. Here, for the staircase logic, you want to look at where price has stayed for the longest. So this will be a place. Here price has been for a while. These levels I will be looking at. Right? The consolidation areas, I like to call them. Those consolidation areas can be as minor as this. On the 1 minute time frame, of course. And here we also see one. Look, little consolidation area. This is short again. This is also consolidation area, where price really shortly went sideways. These are the points in the staircase we put more weight to. So let's give a little example. If this will start to shift, currently it is not, but let's say this is shifting. We will be either looking at the previous staircase or the previous staircase where it has consolidated the longest. Meaning, we will be looking for a long entry perhaps here, around this level. And how will we play it like here? It's quite simple. Again, have a little base, we draw the highs, we draw the lows. What really is happening? We are unable to break past the lows this far. So, which way should we be going? We again look at the bases. We're looking at those previous highs and the previous lows. Okay, now I'm going over to boxes. This is annoying me. I'm not that prepared, you know? I just know the logic that I use myself. So, the previous staircases. These are now the levels we will be looking at. And what would we target? We will be targeting this. And then this. Why? These were the steps where we stayed the longest. Okay? And for the highs, this is what we're looking. Perhaps it can do something like this, or the lows, and it may do something like this. Okay? This is the simple logic of the staircase. Now, I want to add one thing into it. A lot of you guys have seen this previously on my posts, perhaps in Factor Prime's Discord. It's the 1221 EMA. Let's look at what this really does. And a thing I want to state right away, this isn't waterproof. You always need a confirmation for the EMA scanner. I use price action as my main, and I use a trend scanner to confirm that bias I have. Okay, now let's just remove everything and go into this logic. So, what do we want to do? With scalping, you need volume and momentum, or one of the two. And a big thing within scalping, you usually don't want to go against the trend. Because let's say I have a downtrend. What is a downtrend really made of? Decently sized downward moves. You see that upward move is smaller. So when the trend is down, let's illustrate this with a little example. Let's say you are able to trade this, yes? And price action is exactly like this. What trade has the best risk to reward while using a similar stop loss. So let's put this at 0.4 as well. Okay. I think you see it right away. And the way I explain it, I hope it seems really simple. Because what does this really tell you? That during a downtrend, your moves to the downside will be usually larger than the moves to the upside, giving you a way better risk to reward on the downwards moves than on the upwards moves. This is why a lot of scalpers and traders itself say the trend is your friend. And you don't want to fight the trend. Just like here, what really happened? Remember that base we drew? It held, and it's going towards those highs. But let's say I will be looking at a short trade in the uptrend. We have this exact same concept, but then it goes the other way. Because in an uptrend, the downwards moves usually are smaller than the upwards moves. And you obviously can see it here in the chart itself. Now, when the trend is going up, those moves to the downside are really small. The moves to the upside are really big in comparison to the downwards moves. Here again we have the same concept. Yes. So first, you are in a short-term uptrend. You start to shift, and now that move to the downside is way bigger. You see, this is your pullback to the upside. Here. Really small moves to the upside now. And to the downside, it's really big. Same concept you can see here. Small moves on that upwards move. The trend is shifting again. And the moves to the downside are bigger. This is where people say, don't fight the trend, or the trend is your friend. Okay. Now, let's again look at this little part that we were just talking about. You see, we are still making higher lows, meaning that this staircase still slowly grinding up. Even if it comes here, it is still grinding up, right? And in a phase where, let's say, we get one massive move towards the upside, and we have a little staircase here, okay, then I would still be looking at these previous highs, because we spend a lot of time here, and its previous staircase. Okay, I'll try to find a little example where we came back into such points. Yeah, here we go. A perfect example. Let me remove this first to illustrate it a little bit easier. We see this upwards trend. Yes. Okay. On this downwards move, you can see that it stopped here, with the staircase of the high being here, getting broken, and you see here the logic going back into a previous staircase. Yes. So we have this low, we broke below it, we come back into it, we get that further drop. But now, on this further drop, you see we are staying above here, right? Then we want to look at the bigger picture. How could we have expected it to be around here? Remember the idea I just illustrated? Those previous highs, where we spend a lot of time before going up. Right? We spend all the time here. And you see, when that trend starts to shift again, let's illustrate it. I want to look at the staircases. At those staircases. Yes. So you see here, this staircase was broken, this high, coming back into that previous high. And we get the downwards move into the previous staircase. I hope this really helps a lot of you guys with the 1 minute trading. And of course, here we go. See how the low was held and we moved up. Well, this would have been a really nice short-term trade with an invalidation below that low, because this, of course, was the box here, right? So it held, we run it back to the highs. Okay, just like shown earlier in the video. If you want to see how this was looking, again, if you don't remember it, just go back into the video at the start and you will see exactly how this was looking and why I expected it to go higher. Quite simple. But let's get into the trend scanner and how to utilize this with the staircase logic. So the staircase logic we already have, and with the staircase logic and a trend following system, we don't want to go against the trend. This is telling you what the trend is short term doing. It doesn't tell you what it did previously or 5 days ago, or what the daily overall trend is, which is why I usually combine it with a 1 hour or a 4 hour. Okay, what do we see here? On a 1 hour, we already have spent a lot of time in a downtrend. But let's say we aren't here in price, and price is only here. Here we can conclude that this short-term uptrend has shifted. Again, it's the staircase logic. Look at the lows. Yeah, and the highs. Well, we didn't even get close to the previous highs, making already a lower high. And we are unable to break here, but we are showing signs of weakness, being unable to get past this, right? And what happened on the trend scanner? We get a cross, meaning that the average price is most likely going down. And there you see, get a consolidation area. But where does this rejection happen, boys and girls? Again, at that previous staircase. And if we zoom on this a little bit, I'll quickly remove everything again. Let's draw it right here and go on to that 1 minute time frame. See what really happened. Because when I show it like this, it probably looks really clear. You're going towards that previous staircase. And like I said before, when we want to look at trend continuation, we look at this part and this part. Because in the staircase, this is your high, this is your low, right? And this is also a decently important part of the staircase for me. Because this is an area, again, where you spend a lot of time. And what happened? And let's zoom in. What did the trend scanner give you? The 1221 EMA? It flipped. And now we continue the staircase logic. I'm not making it up to you guys, but this is really how easy it can be. And of course, what is your target here then? Because this really looks too easy, right? Well, you can only confirm that it's not continuing here when this candle has closed, this red one. Yes, here. So when people do some backtesting, usually they put it like this, but this is bullshit. You can't enter here. Realistically, you can't. Where can you enter? On the close, when it showed and confirmed this rejection. What will be your stop loss then? That previous high. Because with the staircase logic, when is your logic invalidated? When it breaks that high. Because when it breaks one side of the staircase, there is a way bigger chance to fully flip it, creating and the higher high and the higher low. And this is why we put our invalidation above that high. Because otherwise, it may even do something like this. Well, I'd rather lose a little bit of money here and get the chance to play this, right? This is a simple way of scalping. And again, what would we target here? That's a question a lot of people ask as well. We look again at your previous staircases. So, this is the move that caused us to go up. This little part here. So for me, this would have been a take profit. Maybe even footy. Because with scalping, I'd rather take profit here and get back in here. I don't care. I'd rather take a shitload of trades on the way down than hold one big trade. Because I don't know when it's going to reverse. But let's say I take profit here and the price reversed. So let's say something like this happened. Well, now we get to play this. And if you are just holding, you just round tripped. But price will simply tell us what it's going to do. Well, it's not even able to claim previous lows. You see? And it's also that previous staircase again. So we would have taken profits here. And then we would have did the exact same. Opening simply a new position. And where can we confirm it again? Not here, not here, no, we would have confirmed it here. This would have been a worse RR trade, but of course you play with either your leverage or your position sizing, depending on if you use isolated or cross margin, of course. Well, what would we target here again? Some previous lows. Well, where did we spend a lot of time? Let's just purely look at this. The previous staircases. Okay. And here, a little time. This was actually kind of interesting. Where we got this big reverse back up. Let's zoom out. Where did the price consolidate again? You see it? Here we are consolidating again. Yes? Leaving us probably exiting the short here or here. And that's the beauty of scalping. You can literally just re-enter the trade. As long as your risk management's proper. Because you see, the logic, those upwards moves again are tiny, so during a local downtrend, why would you go long? The only exception for me in a downtrend to go long is when a really big dump happens in a local downtrend. So let's say this. It's quite decently sized. This would allow me to open one long. But the thing with opening a long against the trade, against the trend, you don't want to hold it for a while. Because you expect price to do something like this. But it can do something like this and then continue down if it made a really sharp move to the downside. But you need to know that the moves on the downside are longer and deeper in terms of percentage wise and in terms of time. And this, of course, for an uptrend is the exact same logic but reversed. So I only allow myself to go against the trend if a really sharp move happens and there is a short invalidation. Because I know I can't hold this trade for long because I'm against the trend here. When can I know I am able to hold the trade for a bit longer? When the trend is shifting. And here, we had no shift in trend. We only had a higher high, but we didn't have a higher low. So if you would have just held this trade, okay, here it would have worked. But I would have rather exited the market here, re-entered here, exited here, re-enter here. Giving me 3 trades, instead of you waiting and round-tripping it 3 times before it runs. Right? And here, you get your confirmation. Because a higher low has now been created. Okay? And again, how do we trigger the short-term play here? We look at the staircase. It's usually a small consolidation with a high and a low. What's happening? Well, you see it right here. Okay? And I'll show you the example right here again. It's quite clear when you start to understand the logic. Yeah? We broke this. And now comes the interesting part. You see, we are having this shift right now. What's happened? We get this flip into the previous consolidation. And we run back to the high scan. I know I'm showing the same price action again, but I really can't make it more clear than this. I tried to make this video a little bit longer so you can see how this move played out and understand really the staircase logic. Because again, how could we have known this? Well, we are coming back into that previous high, boys. Right? I'm explaining this concept while it is happening. Okay? And here again, you see the same logic. And what happened on the trend shift? Here, on the trend filter, I mean. It continued to go up. Didn't even crossing once. And you can see sometimes it gives more fake signals than the other times, which is why we combined it with the 1 hour. And like I said here, what did I mean with going against the trend? In this uptrend, we don't really want to be shorting because the short moves are really tiny and the up moves are way bigger. You see the staircase logic being illustrated here. And this, for me, locally, we're now here in a downtrend. This, technically, was a downtrend. You shifted the lows, you shifted the highs, right? This is the exception. See? Really, really steep move compared to everything else. This was a really fast move, right? And again, here I would allow myself to counter trade the trend. But I just need to know when counter trading the trend that I don't need to hold it for a while. Because if I hold it for a while, it's most likely going to continue or give me a higher low first, making me able to take profit here and re-enter on the low. And again, the same concept I've been teaching you here on the 1 minute. You can now see what's happening here. Why did we reverse here, boys? On a short term. Why? Your previous staircase. I really can't make it easier than this. This is for me just the way how I look at price. I look at price like it's either in an uptrend or we're in a consolidation phase with perhaps some more moves, and then I expect this to go back into that consolidation area. Also on this downwards move. Let's remove everything again. This is where we spend a shitload of time. These are the highs. Oh boys, what happened again? You get the shift to the downside, retest those previous highs, and you retreat back to the lows, giving you a short opportunity here. This was counter trend, so with the counter trend, you don't want to hold it for a while. Understood? So here we target nearby lows. So we are not targeting something like this, because we expect we are still sort of in the uptrend. Okay? Creating sub higher lows. Okay? I won't keep you guys here for much longer. So everyone, have a nice day and keep trading. If you want to see any new concepts being dropped, make sure to let me know. Okay, have a nice day, guys.